Non-farm payroll just dropped. Let's take a look at everything. Let's get started. Risk disclaimer. We know there's risk in trading. Please know it's your trade capital only. You know the deal. Social media, make sure it's the real me. I keep having to send messages in my Discord channel about scammers and direct messages, so please just double check. You know how to find me. YouTube.com/Chris Pulver, Facebook @Real Chris Pulver, Instagram, Twitter, Real Chris Pulver. I even changed my LinkedIn profile to Real Chris Pulver. All right, let's go to the charts. So FXY 64, JetBlue, that's from yesterday. Pre-market on the DIA 360.87, so down about $1. SPY down about $1.80. Interesting. This one's down about $2 and change, $2.80 on the QQQ. And we'll go IWM, see what the numbers dropped. And I'll log into YouTube, say hi to everybody. We're down around about 70 cents or so in the IWM. So question came up this week, do I think non-farm is going to be a big event? And I said probably not. We've had a pretty quiet setup overall. I had trades yesterday in EOD. We did a little credit spread straddle above and below. We're probably going to reset those trades today. I don't think I made them good till canceled, so we'll revisit those today in class at 10 o'clock. And let's get after it. So let me get logged in to the channel. Let's do this. YouTube.com/Chris Pulver. We're live. All right. Good morning, Denise. Good morning, Jang. Good morning, FK, David, Jacob, Gary. Good morning. Unlimited Freedom. Good morning. Morning, Chris. All right, let's have a look here. Morning, Ken. Morning, traders. Happy non-farm payroll Friday. A little appetizer to next week's big event, US CPI, FOMC on Tuesday, Wednesday. We have a bunch of other central bank rate decisions as well. Japanese yen kind of came out of hiding, which was interesting. Let's go to the dollar yen really quickly. We're at 144. How aggressive was that change? Pretty aggressive, yeah? So I do have a couple positions. Dollar yen looking for a big old swing. Small trade sizes. Can't emphasize that enough. Very small trade sizes on these swings. Otherwise, stick with the short-term alignments on the yen crosses. I was looking to get a pullback at 149 and change. I think I put in another order here around this pocket around 146. Let me confirm that with my flex stock. Willard, good morning. Let's go flex stock. Trade log. I'll check and see if the robots had some fun this week. New Zealand yen. We took a market order, then we have a pending order. Dollar yen 146.50. We're not there yet for a pullback. So I still have the 149.49 pending sell, and we have the 146.50 pending sell as well on the Japanese yen. Which means this probably is a little bit of a retreat on the FXY, which is a option play. Yep. So the FXY was up here towards 65. Oh my gosh. All right, I'm going to set a chart alarm to see if this thing gets past these highs. I've got the expiration out to March 15th on this one, so back to highs. But we're going to see what this little JPY run is made of. And let's go dollar index. Let's see what the news gave us for the market this morning. So this week, CAD pause rates, unemployment claims came in as expected. Why did this? I mean, come on, guys. Not Forex Factory. There we go. So 184 forecast came in 199, 1/10% higher in average earnings, and the unemployment rate dipped to 3.7. Okay, well, if I was the Fed looking at this, they're probably not super thrilled. That does not signal or indicate a softening labor market. It's been happening a little bit here and there over the last couple of months, but we're still printing steady, 200,000 jobs, having the unemployment rate dip and having average earnings go up. Probably not that great. I think Jolt's job openings, that was on Wednesday with the ISM numbers. There were less job openings. So, All right, let's see. Again, it's really what price is doing today, currency strength wise. We got the dollar jumping on this. We got the CAD going up as well. We got the New Zealand dropping. Swiss is dropping. The yen was super strong this morning. Not as strong as yesterday. This was the yen yesterday, giving some back. And then today, super strong and then faded very quickly. So dollars jumping, CAD's jumping. Let's take a look at the DXY. And this is why we want to stay out of the middle and protect some of our dollar-related profits. We were long Aussie dollar, long New Zealand dollar, and long euro dollar, short dollar yen. And we took profit on all of those within the last couple weeks as the dollar hit these lows. And I just said this was in the middle. So I didn't want to, force positions in the middle. I think for the remainder, I mean, look, next week there's a lot of news. It could be no direction or it could be a lot of direction. I'm not sure. I think it's going to be more more noise, and then the market will settle in and try to find its footing perhaps the last couple of weeks of the year. So if you take a look at the calendar, for next week, so the 11th through the 15th, like I said, CPI Tuesday, FOMC Wednesday, Fed is expected to do the same thing, just pause at 5.25, 5.5. The interesting thing over the last month or two, November especially, is that the expectations for the Fed rate cut cycle started it was in June. It was like higher for longer, big pause cycle until June. And then the market has just slowly shifted it back to March. So are we planning for a rate cut in March? Possibly. That's the highest percentage right now. If you go to that CME watch tool right here, right? So this is your December rate decision. Very high probability that nothing changes, but Powell's press conference, the language, we'll see what he says. January, it's the end of the month. Probability is nothing. Stay the same. March, this is the big one. You have a 52% probability now. This is what the market expects, that we're going to have a 25 basis points cut. It was June. Before we came into November's FOMC, it was June. Now it's March. That's a big shift. Obviously, that can change, right? Next week's FOMC could change all of this. But it's really going to be interesting to watch the Fed and see what they do. I think that yes, inflation numbers have improved, job numbers possibly, but 3.2% is still a long ways away from 2%. If that's truly the Fed's target, there's still a long ways to go for deflationary pressures to continue and bring us down to 2% or sub 2% for those cuts to start sprinkling in, right? I mean, if we're at 3.2%, the Fed rate's at 5, 5.25, 5.25, 5.5. Yes, the rate is restrictive. But same thing applies if we're, all of a sudden seeing, I think a big print for CPI, which by the way, I think next week we don't have a forecast for. We don't have a forecast until it's like the week of, which is kind of frustrating. Let's see here. So this is what I want to see. I want to see if there's a forecast for year over year, and there is not. Previous was 3.2. So if this is a sub 3, I think that's very, very solid progress, but it's not 2%. So it's still going to take some time. We have core CPI looking to go up 0.1 of 1% from last month to this forecast. Month over month would be the same at 0%. And then year over year, are we still above 3? Are we sub 3? We'll find out next week. And maybe this gives us a forecast on Monday. But this data is Tuesday the 12th. Okay. I appreciate that, Jason. Thank you very much. Good morning, Perry. How are you? Let's jump into the chart. So again, like I said, dollar index wise, I still think this is a messy area. Okay. So I'm looking for the following. We have a little bit of a pocket right back in here. I could see the dollar pulling back into this zone. So let's say 105 to 105.50 on the DXY. If the dollar pulls back into that area, it may offer this. It might be pushing lower, pulling back, and then for the remainder of the year into Q1, if the dollar gets weaker, again, this is all correlated with pretty much everything. Markets, stock market wise, equities wise, ETF wise, commodities wise, I think it's all tied to the dollar for right now. So if we see a continued holiday drift to the upside in the stock market, then I think a pullback on the dollar looks to go lower. And how much lower? I think 101 is really strong support. 100, as we saw here, is a massive level of support that I do think it's going to be difficult for the dollar to breach that. So again, Holiday rally, if it's persistent, then we could see a pullback on the dollar, then offering fresh lows going into the later part of the year. There's only what, 3 weeks left to trade. We've got through the 15th, the 22nd, the 29th. That wraps us up. I will be. I don't know. I'm gonna do some creative trading next week. We already have some expirations out to 12/15. Not trying to force some trades. I'm probably gonna give myself some time. Um, Maybe taking some expirations out to the 29th. We're looking to put in some trades on the 5th. We'll probably re-implement those trades. They got canceled yesterday, end of day, because I don't think they filled. Qs got filled, actually, never mind. So we're in the Qs to January 5th, but next week's going to be a fresh batch of trades looking to trade probably IWM, DIA, and QQQ, but I want to go out some more time. I think we need some time, and to do that, we might do some debit spreads. We'll find out. Okay, so that's the dollar index, and how the day settles. It could just be a noisy day. Non-farm payroll typically is. So just zooming in on the dollar index, if you're looking at this, watch. If we pull back into this area here, I'm looking to fade the dollar. Not just automatically assume that it's going to go lower, but look for confirmation. So look for a trend line break. Look for alignments that you have in any trend system to see if the dollar will continue to go weaker. Okay, how much lower? If we get to 101, I would be trailing for all profits on dollar pairs if we get to 101, because if we get to 101 and work our way to 100, I still think there's strong support at that level. Okay, oil is probably coming off those lows at 70 bucks. Yep, a little bit. We had lows at 69. I still like a short-term play on oil. Not yet though. I want to see if it settles in like it did over here. We settle in at $67, $68. We start to break the trend line. I don't know if we're going all the way back up to 90, 95, but I do think we could range like we did here. From 65 to 80. That's not nothing, right? 67 to $80. Get a few bucks there in oil. Watch the CAD accordingly. But I think we're going to be range bound in oil. So trend line break would be nice. See if it settles in here to these support levels. Gold and silver. Gold 22.2. That's 2022. And I was looking for gold to continue to push a little bit lower, but I didn't like how. I mean, we have not seen price action this violent in gold for a long time. So that type of move, to me, is one of two things. Either this is the sign of the top, and we're just looking to fade gold with whatever resistance levels we get. You look to fade that stop area above. If we're above 2080 or so, I don't think we want to be holding short on gold. But if I'll say actually 2100 is probably safer. If we're below 2100, I'd say, willing to stay in gold to the downside if we stay below 2100. But if we hold these levels, here, work a little bit lower, come back up here into 2070 again, start to close on a daily, weekly time frame above 2080 to 2100, then we might just be coming back up to test the high. And this would be a range that we want to keep an eye on. If we break above it, then obviously we're in open space to the upside, which could be big. And again, gold to the upside would be a weaker dollar. So I think a lot of this will depend on what the dollar ends up doing. How do we position for gold and silver? What are commodities doing? What's the market going to do? And I know it's annoying. It really is. But the nice thing is you can watch one chart and you can forecast, a dozen different items. Silver, big spike to the downside here. We've had this big correction. Same thing with silver on the higher time frame. Let's go get a little bit more perspective. So silver just came up to inner year highs. We had May highs of this year retested, fading back. There's a lot of support here around 23 bucks. A lot of support around $22. So I think silver is going to be pretty noisy. Bitcoin, Ethereum. Bitcoin at 43,600. I'd still love to see a pullback. 38 minimum, 32, 33,000 would be ideal. Targeting this high at 48. I've mentioned this in the trading rooms. Is this a high that we end up getting a pullback from? Possibly, right? Pullback in here. This could be a very long-term head and shoulders like that, and this creates the neckline. And if there's a way to rebuild and accumulate down here, I would love it. I'd love to have some trades in here between 31 and 36,000. And then from there, I mean, the nice thing is if that is the case, if that's our play, then we measure this. We have our low. I'll just do this with my chart. So if we measure this move, and again, this is if we stop at 48 and we stall, we can measure this move. It looks something like this. If I draw a box from the lows and we come all the way back up to here, that creates our swing. The nice thing is, if we establish that neckline, all we're going to do is take this. That would be our neckline break, and you project that move. So the nice thing is even at a conservative level, if this is all a move to fulfill head and shoulders, that will put Bitcoin up around 80K. If that becomes a three-wave move, you do the same thing, project symmetry on a pullback again, and then you're talking, probably 1,000 plus or 100,000 plus. So again, we'll see how it plays out. I would watch 48K. You can see my chart alarms, 48K, 38K, and then 33, 32. I do want to add here. If we have a pullback, I'm going to add. If we have a pullback, I'm going to add. Daily time frame, overbought, oversold with divergence. Typically, that's not a failing indicator. So we have gotten a little bit overextended. So I'd like to see a little bit of a dip or a pullback. We'll find out. Okay. Ethereum broke above that 2150 high. We're at 2348. Ethereum's starting to scream. It's almost starting to outperform Bitcoin a little bit in the near term. I do like some exposure on Ethereum with this break right here, targeting this high. And there is more room. If we just go back to the highs of Ethereum and the highs of Bitcoin, the comparison is Ethereum from here is an outperformer. If Ethereum gets to these highs, it is outperforming Bitcoin. So at least in the near term, that's a pretty enticing play to say, okay, let's say Bitcoin hits 68K. Well, here the high on Ethereum is 4,800, right? If we hit those levels, this performance from current price to these highs is roughly 104%. Okay, if you do the same thing on Bitcoin and you look at the highs from 43 to 68, look at that as a percent. So current price here, highs right here, 57%. It's almost a two-time performer. Not bad, right? So, I mean, would you rather have 100% or rather have 57%? I think the answer is pretty simple. So a little bit of exposure, that's what I'm looking at technically. I still like Bitcoin more long term. I mean, if I made more money in Ethereum, I'd probably just convert that profit into Bitcoin anyway. But as far as short-term speculation and room to run, that's how I would play it. So I did some conversion on Ripple as we got into this 35, 36,000 area, and we got a nice little pop to the upside. We're looking to see, where this thing goes. I do hope there's a technical correction and pullback soon, just because I want to see if there's a dip to buy. If not, then, well, we're still participating. We're still talking about it. Can we take a put on? Can you take a put? I mean, what direction you want to go there, Peter? So I have a bunch of trades on this one. I mean, are you looking to sell a put to possibly take some assigned shares, or sell a put to just collect some income? One thing I noticed, I tried to do the same thing, by the way. I did a $14 naked put, and it is I can check on the margin, but I want to say this is a pretty darn expensive instrument to trade. It tied up about 3 times more margin than it normally does for just a normal stock. So let me see. Let me log into my Schwab account really quickly. I'm going to go account summary. I'll log in and check it out. I want to see what that margin requirement is, because it was pretty pricey. I had like 22,000 in buying power, and I did a naked put at 14 for a couple of contracts, and it reduced me to like $1,000. It was like, I swear, like 3x leverage. So let me see if I go trade accounts, bring this down here. I'll show you what I'm doing. So if we go BITO, and if I just did a put, sell to open, do a margin, this should be a pop-up menu. So usually I'm looking at like 20. Yeah. Okay. So this is definitely, so usually a margin requirement for option trades would be like 20 to 30%. This is 100%. So this essentially is just a full-on cash position. Okay. So that's a lot. So just know that going into it. This is why I put it on a spread. So I did a 14 by 12 bull put spread. I do have a long call. That is the one thing I did. So I've got to add this in here. I've got a bunch of stuff going. So we have 14 by 12 bull put spread. I have a 17 by 16 bull put spread. And I'm going to put in here staggered because it's over like 3 or 4 months of expiration. So that's a nice little like half to 1% gain per month. And I don't know if we're coming back to 17, which I hope we don't, obviously. And then I also have a $16 long call. And this one's out to January, January 2025. So I went way out there. The debit itself only cost me about $2.60 or $2.75. And then I also put in a $20 long call for January 2025. And I'm just looking for a straight up intrinsic value. I mean, if we're going to see a crazy run on Bitcoin, I look at the charts the same way, right? If Bitcoin runs to 48,000, this might be the equivalent of 48,000. If Bitcoin runs to 68,000, that's the equivalent of 68,000. So my long call just by itself, if this just runs into, $44, well, you can do the math on that, right? I've got a $16 call, so 44 minus 16 gives me $28 of intrinsic value on my call option. So if I pay $2.75, oops, so $44, that's if it breaches the highs minus the $16 call, 28 divided by 2.75. That's a 1,000% move. So that's a 10x return on my call option. Okay. Do I think it's possible that we get there by, January of next year? I do. I think once we have a halvening, once we have ETFs going live, and there's more inflows coming in, bigger institutions, your Fidelities, your JP Morgans, your Schwabs, your whatever, all of your traditional kind of IRA holders and custodians are offering some crypto exposure in some capacity, or just straight up Bitcoin exposure. I think that's where we get some additional inflows. So could be very big. Again, speculation, but I'd rather do it with options, right? Trade a call option, trade a couple credit spreads, versus having to be a triple or quadruple leverage instrument, which obviously makes it a little bit more expensive to trade. But yeah, BITO. What about a put option on Ethereum? I don't know. Yeah, I mean, I'm not trading options. So Herschel, that's a good question, but I don't know if there's any. And correct me if I'm wrong. Maybe some people out there can tell me. Do we have any ETFs that are on Ethereum? Let me see. ETH ETF. Um, what is that? Ethereum ETF. So ETHXH purpose. I mean, these don't sound. I mean, the reason I chose ProShares is I've traded ProShares oil, gold, silver. It'd be the same thing as like some BlackRock. I mean, ProShares is pretty big. Vanguard, Fidelity. I mean, all these different like massive custodians that have ETFs. That's why I jumped into ProShares. I'm also in GBTC. I don't know if there. I can do some more research on that, Herschel. There's probably something out there, but as we go into next year, if we officially have kind of open the floodgates on Bitcoin ETFs and SEC approval, then sure, don't be surprised you're going to see Ethereum. You're going to see some others, but I would say primarily Bitcoin, Ethereum would be the main ones you'd focus on, right? But again, they're probably going to be expensive margin wise, so I'd say spreads and long options probably the best strategy. So long option is defined where the most I can lose is what I paid for it. Credit spreads, my biggest risk here is $2 and a dollar. But I've collected, I think on these 17 by 16s, I'm only risking 40 cents. On the 14 by 12, I have a bit more risk because I was just going for some income plays. But the probability is I'm gonna make some money by the end of the year. It's like 12/29 expiration or 1/5 expiration. That's just an income play. Okay, all right, let's talk currencies for a moment. Anything else happening? So the dollar faded back down. The JPY is getting stronger. Good. That's what I want to see. CAD's fading as well. We didn't have CAD news today. We just had dollar news today. CAD was last week on Friday. So as I said yesterday, I think it's just going to be a noisy day. I think most of the possible directions coming tomorrow, which means equities on demand students, when we meet up at 10 o'clock, we're probably going to look at implementing the same trades I did yesterday. So we're looking at 1/5 expirations, trying to do some credit spreads above and below. Those spreads for ETFs like the SPY, the QQQ, the IWM, the DIA, they were really tight. Or I'm sorry, really wide. It was like $1 to $1.40. Like bid $1, ask $1.40. We're trying to get $1.20, $1.25, and didn't get filled. They got filled on the Qs only, which by the way, I guess I could add that to the chart here. So the Qs, I think we did like a 394 by 393 and then a 383 by 384. There's some exposure in the middle with some potential risk, but if we go higher or lower, we end up netting about 25 cents in that position. And then I'm looking to see if I could do a strangle or a debit spread or two out to the end of the year. So I might do that. I might do some 25 delta strangles or 25 delta related debit spreads, and maybe have some expirations going to, well, I was going to highlight that, but I might have some expirations going to the 15th, the 22nd, and the 29th, and just see if I can get some love on these ETFs if they're going to move. Maybe go out like 29th to the 5th to the 12th, and see if I can just give myself a little bit more time. Just not, I don't want to overpay for them. That's my point. I don't want to overpay for these options. I also don't want to get stupid aggressive. We've had a great move the last few months especially. So if I go to equities on demand, we pulled in a lot of good profits. Delta Trader as well, a lot of solid profits. Is this? Yes. Okay. Load up. I need some tabs on the bottom. Okay, long Bitcoin ETF, March 24th, strike around $17. So yeah, Peter. So you're looking at a naked put, right? So a $17 level. I mean, if you're, like I said, if you're doing a naked put, just be prepared for it to eat up a bunch of buying power. I would prefer you take a spread on it, like a 17 by 15 or 17 by 16. I just don't know what you're going to collect because you're going to be $3, $4 out of the money, right? If you're doing a put, you're going to be, if you're doing a spread, you're doing a, out of the money put. So, I mean, you could probably safely collect like maybe 10 to 20 cents on it if you did a spread. But it's going to take up a bunch of buying power. That's the only thing I'm just bringing to your attention. All right, here are the tabs. So Delta Trader, from here all the way down, debits versus credits. $191 in credit, which would be the equivalent of like 19 grand in profit. But of course, we pay for these trades too, so 163. So we're nearly up 30 bucks. 30 bucks in the last couple months, just in credits over debits. I mean, one contract, he's just 3 grand in profit. Not too shabby. So we got a couple of trades going for next week. I'm going to be adding more for the Qs, the IWM, the DIA, just trying to figure out what the best way to do it is. It's a delicate balance of how much volatility and movement and drifting we have through the holidays. The Santa rally, as they say, has kind of already started. We had that explosive, ridiculous move from November 1 into the end of the month, and now December has kind of started off with a lull. But usually the 11th through the 31st of December does have some movement. Generally speaking, December is a bullish month in the stock market, and I would like to see it move a little bit more than what it has. If we go into the month right now, okay, the monthly candle, that's stuff I was talking about this week in EOD. So the monthly candle so far, you can see how quiet it is, right? So month of November, a ridiculous rip. December, if we have any drifting, I'd like to see December maybe have a month of follow through. Maybe try to close the gap in some of these highs, maybe breach, right? By the way, we have been in a 2-year drawdown. If we don't cross these highs by December 31st, all the major indexes have been in a drawdown where they have not made higher highs in 2 years. So that's a big deal. The average is around 18 months. So if we go 24 months without a new high, that's all of a sudden like, oh, was something wrong with the stock market? No, but it's that's why I'm looking at like the month of December could have some drifting, and maybe it kind of gets fired up by the middle of the month as we get through next week's news. Okay, CAD Swiss to make a grand recovery. Well, it'd be nice to see any of the Swiss pairs make the play that I want. So this is a monthly time frame. Let's go to a weekly or daily. I still like this currency pair a lot. We've had a lot of recent lows that have been tested, kind of all-time lows, and struggling and sitting here at these levels. I'm just being extremely patient. I think from 6,500, where we're just below that now at 6,470, I think I have a 65 or 6,600 is my lowest entry, and I think I have like a 6,250 and a 6,000. I still have pending orders on the downside just in case, but what I'm watching very closely is something like this. If we end up forming some type of falling wedge, or maybe it's this, trace these lows, trace these highs, and we have some consolidation in here. But if the CAD Swiss is going to make recovery, I really do like this area to be long a lot. range trade back to these highs at 78. I mean, that's a long ways away. I'm still stoked to get this thing back to like 71.50, which is this pocket. So if we had profit in this window, totally happy with that. But longer term, maybe the next 12 to 24 months, take this thing from, building position, and let's say my break even's like 60. I think, what is my break even actually? I think my break even's in like the 66 area. Let's find out. CAD Swiss break even is 65.97. So if I have this cost basis at 6,600 and this thing goes to 7,700, that's 1,100 pips, and I'm in, I think right now, I guess it's harder to tell here, but 1, 2, 3, 4, 5, 6 positions with pending orders on the upside. So if I get 6 positions at 1,000 plus pips, I mean that's a ton of pips, right? You're going to clear out 4, 5, 6,000 pips of gains. That's a big chunk of profit if I don't do anything else. If I just sit and wait, that's still a lot of profit in the next maybe 6, 12, 24 months. If I add more positions, I can stack that up even more. But it is patience, patience, patience. Now think about oil for a second. If oil bounces to that, $67 to $66 support level, rips all the way back to 85 or 90, that should hopefully help this trade come alive. This trade comes alive, that's a great target, but even halfway, right? This is the low, this is the high. Halfway points are always pretty important, so that's around 71.50 to 72, which is a big old pocket. I'd still take profit there, or be happy to take profit there. Okay, NAS. Same thing as the QQQ, just watch. We'll find out more going into next week. Next week CPI, next week FOMC. Weekly time frame looks like we have a bit of a dip or a pullback, right? Monthly time frame, we just had a huge correction through August, September. We had a big rip in November. I think the monthly chart looks like we could just have another month, right? With that type of move from November, doesn't look like December could just be another bullish month. Maybe January, another bullish month. Maybe we breach the highs. I mean, I'd be a little bit nervous to see until, and think about this. I mean, if the Fed is going to cut rates in March, we might have more of a monthly drift to the upside, maybe breaching the all-time highs, and everyone gets all excited. And I'm just throwing this out there. This could be the real like trickery of the market. This is so silly because I'm a retail trader just like you, but dumb money. Okay, what would happen if I'm not gonna put dumb money. I'm just gonna put risk off savers, right? That's gonna be my nice way of saying people are coming out of money markets and CDs and treasuries, right? Everyone for 2022 after getting burned, they're like, I don't want to feel that again. So they go into these crazy low, not low. I mean, hell, 4 or 5% is better than nothing. But obviously they're missing out on all of this upside we've had this year in the markets, right? The Qs are up 40%, the SPY's up 20+%, the Dow's up, teens, like 15 to 18%. But everyone that was risk off this year has certainly missed out on a lot of potential gains. What I could see happening is this, and this is how the market works in a very twisted way. Let's say the market breaches the all-time highs. All of these people would be willing to say, you know what, maybe that's a sign the market's bullish again. Dump back into the top, and then the market corrects. That would be the ultimate like middle finger to everyone that just tried to stay out of harm's way, and then they get suckered back in, and all of a sudden we have a correction. And this becomes like some type of larger broadening pattern, and we have more indecision to work with. Because look, this has been a very concentrated market, right? We've had it kind of uncorrelated where we had this weird rolling recession sector by sector. We have had instances where 8 stocks, 10 stocks are carrying the entire broader market. We've only had 2 broad market pushes this entire year. We had it in May, we had it in November. That was it, right? The broad market has really underperformed the entire year. So I could see that where it's like, yeah, we've got the runway to drift and go higher and breach the highs, but doesn't mean we're going to sustain that necessarily, right? Especially coming into election year, where on average election years are up. So we come into year 4, new election, probability is 83% of the time the market is up and positive for the year. Average gains for the S&P has been 11%. So I'll just throw it out there. Let's say we get into the end of the year, wherever that is, and then just measure on average. Let's say that we're at current price or we're at the highs. So what's 11% from here? Okay, if we go average of 11%, that puts us up towards fresh highs, 10.5, 11%. Is that dramatically higher? No. That has, broadening pattern written all over it, if you ask me. So again, I think traders have to trade. I think I'm going to continue to trade the way I've been trading. Active management, participating indexes, volatility. If I own things, I want to have protection. There's no reason to be exposed to the downside because if it turns, it could turn and be violent. Okay. So yeah, that's what I'm looking at. Same thing on the S&P. So if we go SPX, same thing, right? What's another 11% to the upside? Well, if we take this level and we go another 11%, then we're talking, yeah, I mean, we're talking that breach of 5,000, right? Not that far away. 11% gets us up near 5,100. Could I see that? Yep. I see that. I could see that. That would be worst case scenario. That'd be awful, right? But we could see some, I mean, this does remind me a little bit of having this correction here, going back up to retest the highs. This reminds me of like 2015 and 16. We had about a 20% area of highs and lows before the market found its footing in 2016, 2017. So a lot is going to unfold and be unpacked next year, right? I mean, we're going back to like a little bit more normalization of monetary policy. Rates are still higher for longer, but how much cutting do we actually do? And that doesn't mean that the Fed is forever done cutting either. That's the scary part is the Fed might cut rates by 1%, and then inflation rears its head again, and the Fed raises by another 1%. So we could have like this roller coaster ride of volatility because of the Fed. So I'd say buckle up, like it's going to be nuts. Not to mention, look, markets don't care about the elections, right? People care. It's going to be polarizing. It's going to be just drama that we haven't seen since 2020. But the markets don't care, right? An election year typically is noise. But the market likes gridlock. They don't like to see, one side being stronger. It's like they don't want to see a bunch of policy changes, and therefore the markets just kind of run as is. But typically, an election year is bullish. Let's see here. I believe the institutions still taking higher with the Fed discount. I agree. I totally agree. Yep. And look, there's and not only that, but you have look, like I said, remember the risk off savers that I said here. The risk off savers, after having a year of risk off saving, guess what they might be looking to do? Here's why. Think about this. If the Fed at, let's say you can go get a money market right now, right? A money market at let's say 5 to 5.5%. And let's say in 2024, if you want to go out another 12 months, let's say it's down to 4.5%. Is that as good? No. If you're a short-term treasury trader at 3 months and you're rotating in every 3 months, and all of a sudden, this month it's at 5%, 4.5%, 5.5%, and then 3 months later it rolls down because yields are dropping, and all of a sudden, within the year you're settling into like a 3.5 to 4% treasury. Point is, I mean, this type of money has been saved and preserved, and that's the type of money that also might start jumping back in to participate in some way, shape, or form. This is in the trillions, by the way. Like $5 to $6 trillion have flowed into money markets. So that's a lot of money that could also be forced buyers in the markets in some type of index annuity, index insurance plan. There's all sorts of stuff this gets pushed into. Buy the SPX, buy your Magnificent Seven, whatever, some diversified allocation. So look, there's tons of money that could still be put in to pump this thing higher. So I'd say don't fight the path of least resistance. I mean, how many bears have you seen this year that have been like it's going to be worse in 2008, but yet it isn't, right? Going into election year, it's going to be worse. It's either the best market in the world or it's the worst market in the world. We got to trade it. So I just don't get stuck on one opinion and one narrative because look, there's two sides to every trade. There's winners and losers, right? So, yep, agree. Okay. I know we were able to go a little bit longer today because they did the 8:30 session. Any other questions? Any other charts? I mean, I'm happy to take some questions. This is nice. We can kind of run this uninterrupted. And I'm going to start recording these sessions and actually posting these kind of long form on Instagram as well, just to kind of drive some additional channels. One thing I wanted to also bring your attention to This is something I'm looking to unfold for next year. Let me see if I can find the picture. Where are you? Did I save it? Maybe it's here. There it is. So going into next year, I wanted to switch things up a little bit, not in a bad way. I want to offer more time. I want to offer more sessions. And so I think what I'll do is I'll be maintaining my sessions with the Flex Trading Room, maintaining sessions with my equities on demand. But during the week, we're live on Mondays for a weekly outlook. We're live on Fridays for a weekly recap. I was going to sprinkle in a market minute segment, and I'm going to do this on Tuesday, Wednesday, Thursdays, and probably do this around lunchtime. So probably 12 noon Eastern time, a little market minute, a little power lunch, and just jump in for maybe 20, 30 minutes, just do a little spot check on currencies and trades and stuff like that. So I will start having more and more time on the YouTube channel for live sessions, and hopefully again, whoever shows up, hit the like button, subscribe. Maybe it gets out there when more people start to jump on board, subscribe to the channel. Still trying to grow it organically, just because that's the strongest way to grow the channel. But this will be a segment that I'm starting next year. Probably, if I'm looking at the dates here, I'm going to be off just cleaning up the books and everything the end of the year. The 25th through the 5th, don't really expect a lot to happen other than chart alarms activating, but I'll be monitoring positions, not really trading a ton. And then we get into kind of getting ready to gear up again for a full year of trading January 8th. So I'll probably start doing it the 9th, 10th, 11th, and then do it for most of the year. Okay. Let's see here. Fed to start lowering rates, which could cause reverse market crash. So you're saying reverse market crash as in this reverse market crash? Like that? That's what I read when I say reverse market crash. That would be, I'd call capitulation, right? I'd call that capitulation. If that was the case, and this starts to get look, you can see that this move here from that bottom, that is irrational, which is why we had a correction. If we had the same type of thing where we have an irrational type move in a stretch, it's probably going to correct as well. And the nice thing is let's say that we do have a run to the highs. Well, obviously participating in that would be fantastic, but a likely pullback would be here, right? We pull back into that level, that past resistance becomes support. Where the damage is done if this comes back into this territory here, threatens this bottom, and all of a sudden we're talking about, oh boy, is that an ominous head and shoulders pattern, right? That's the worst case scenario, is we start seeing these terrible patterns emerging that are showing bearish technicals. But I could see a reverse market crash or a melt up. Screw crash. Don't say crash, right? Look, just trade. If the market's going to crash, like COVID was a crash, right? 2008-9 was a crash. That was I don't know if we're ever going to see that. I don't know. We may or may not. But the mechanisms that the market has put in place as kind of backstops since 2008, I think it's going to make it very hard to have an extremely downward cycle without having halts, without having the Fed step in and backstop it. Like, again, you have to remember, the biggest mandate for the Fed is price stability, right? So again, we will see. I don't think the Fed is done. I don't think the Fed's job is easy. I think they've been very lucky with the following stuff happening. I think that, oh, what is that? Oh, never mind. I thought that was a divergence indicator. Nope, just pockets. I think that the Fed has been very lucky that the market has been so aggressive this year. The market essentially just jumped like head first into AI and head first into value tech and head first into large cap everything. And the market ran with it. Like I said, we've only had two broad market rallies the entire year. It was in May and it was in November. That was it. Everything else has been led by 7 to 10 stocks the entire year. So that's not a real assessment of the market going, broad market strength, broad market weakness. So a couple things. Either everything continues to melt up with a broader market push, or the tops and the concentration starts to reprice and drag everything down with it, or we still have underperformance in the majority of the stock market and it starts to weigh on everything that's good, right? And you have to remember that there's a lot of sentiment tied to the stock market. So just because Apple can continue to, make 25 to 100 billion dollars a year, Amazon can make that a year, Meta can make that a year, Netflix, Google can make that a year, Microsoft makes that a year, doesn't mean that they are impervious to the market as a whole falling and correcting. So, like I said, I think the Fed's been lucky that the market's been higher. We've had some things happen this year that I don't think anybody really expected. You know, I consume a lot of solid content, read a ton of stuff, and a lot of confusing things out there. You know, how do you have a super hawkish Fed raising interest rates to the point we haven't had in 20 plus years and still have a market that's up the way that it is, while also having a dollar that's been up the way that it was that just started to fade back the last couple of months in this November rip? You know, have gold underperform the dollar for the last 3 years, have Bitcoin, again, reemerge as one of the top performing asset classes. So it certainly seems counterintuitive, which means what? Trading isn't easy. you know, it's not easy, but we can position for it. We can, trade a lot of strategies that are creative enough to make money up, down, sideways, and that's what I'll continue to do. So my point is, we'll figure it out. That's the job, and that is the job that we accept. Okay. So yeah, whatever happens, let's figure it out. Melt up, capitulation move, crash, recession, who knows, right? Remember, that word hasn't been talked about in a while. Now it's a softer recession. Now it's a rolling recession. Now it's like Q2, Q3, 2024. Do we have a recession during an election year? I guess I'd look that up. I don't think that's happened very often. You know, maybe it's a recession after an election year. I have no idea. Again, I really don't care, because whatever it is, it's going to show up on the chart somewhere that I got to trade it. Okay, good stuff. All right, I think that's about it for today. We good? So for today, a little non-farm, currency strength-wise, things are still, look at the dollar just being nuts. New Zealand's dropping, Swiss is second weakest, dollar's back up to the highs again with the CAD, yen's dropping, Aussie's dropping. All right, so check the DXY before we go. Is this pulling back on the SPY, or are we up? So pre-market's down. Yeah, okay, so we're down about $1 on the SPY. We've got 13 minutes to opening bell. We're down about $1 on the Qs, and we're down about 50 cents on the DIA. So if the dollar's going to rip to the upside, or at least push a little bit higher today, which again, pullback, like I said, is likely. So here's what I'd be looking. If you're looking for dollar weakness, just connect the lows and just wait for some confirmation, right? We pull back into this candle right here. That's a nice little efficiency level. So we pull back to this area, and then we can look for a trend line break and see if the dollar can fade lower. If the dollar fades lower, that's how we get the lift for the end of the year. That's how the stock market continues to melt up higher. Fair? Okay. Do me a favor, if you're here watching the session live, nice to see some more, live attendees. So I appreciate that. Hit the thumbs up button for me, like the video. That helps the channel a lot. That's also gets when I do live sessions, especially going into live sessions more next year. If I'm going to be live essentially Monday through Friday for little bits here and there, having 50 to 100 people watching, getting some more likes and stuff like that, it helps my video pop up in those search engines when people are jumping on YouTube in the mornings. Right. And I would say this, I mean, let's say a goal for me next year. I mean, I'd love to see this channel get to 10,000 subscribers next year. Just natural, right? Spread the word. I appreciate it. And we'll see you soon. All right. I could design man students to see at the top of the hour, 10 minutes away from opening bell. And we're probably just going to revisit those positions we took yesterday because they expired on the day. I should have left them good till canceled, but we'll revisit them today a little more neutral. Also want to talk about some zero DTE stuff. Did some deep diving yesterday and found some interesting stuff we can talk about. Okay, sounds good. All right, thanks everybody. I'm gonna say thanks for watching. Happy Friday. And all that good stuff. All right, appreciate everybody. Happy Friday. And I'll see you soon. All right, thanks. Bye.